JB Cycles with an update on May the 28th. So, is the bear market over? By some indicators, you could argue this could be it. Some other indicators say no. Here I have the 3.5-year average, and we see we have not reached this average, and we normally do. We did it 2018, 15, 2011, and so on. But on the other hand, we were down 20% intraday a week ago, and the decline is almost as deep as in 2018 and 2011, and a little bit deeper than 2015. So no, I don't think the bear market is over, but still we haven't kind of ruined the trend entirely. And first, when we break below this 3.5-year average, we can conclude this is really bearish. So I became a bit bearish biased here the last week, and it didn't materialize. So we have the 4-week cycle in gray here, and we are at the point where the cycle now turns down, but we got all this momentum suddenly at the very end of the bullish phase. So is it just a holiday reversal that quickly dies the coming week? Will this momentum just fail like it did back here in early May? I don't know. If we look at here, the vertical lines show the position of the 4-week cycle. If we go back in time, we see at this point we did manage to get a real downside from here, and here we also kind of did that, and here we did it. So it's possible we go down to new lows early in June. But if we look at this double harmonic, if that's still dominating oscillation, we see it started not so good. It was kind of sabotaged, but it could suggest we go down to early July, and maybe we get this bear flag shape, so we don't crash to new lows the coming 2 weeks, but we make maybe a higher low and complete some kind of a bear flag here. Also interesting to see the Fed meetings. We rallied from this one in January, and then we had the minutes, and we were going down again, and we had the Fed meeting in March, or was it early April, and we rallied from there and rolled over, and at the minutes we were in a downtrend. So we had a Fed meeting in May, tried to rally 1 or 2 days, but crashed down, and now we had the Fed minutes this previous week, and we rallied, and we have the next Fed meeting here in the middle, or at the end of say the middle of this bullish phase. So yeah, we could see a scenario where we crash down from here and make a low at the Fed meeting, or we could make a high around the Fed meeting. They seem to show up at these reversals. So yeah. Here I have the general trend from the 3.5-year cycle. We see it's pointing down to this possible low at this double harmonic early July. So I really don't know. At this position, this favors trying to sell short using swing signals, but with this momentum, it's hard to say. It's like up here. This momentum made you step aside and say, I want to see more sideways action, but it crashed down so quickly. So we could see it again. It could crash down quickly, or kind of hoping for some cycle magic. The cycle, these cycles, they do work, but they don't. There's some interpretation here, and the market navigate through these cycles in new ways every time. So you have to look, how did the market navigate through these cycles in the past, and maybe we do something similar now. We can't know. But when looking at the Norwegian market, that tells me the bear is not over in the US, because it has not yet started in Norway. We almost made an all-time high this week, and actually when looking at, this is the Norway 100 index, and the Norway 25 index actually made on an all-time high. So is this a double top? We could be getting into unknown waters for the Norwegian index. Looking at previous cases, it allowed for an all-time high around now this weekend. But if we go on and make higher highs in the coming weeks, then we are in unknown waters. That has, that doesn't fit with the cycles. The cycles say now we should turn down sharply. So it's like at my work we have some substantial financial positions, and I told my boss early this year that we should be careful, the market could go down. And then this spring I told my boss, hey, I told you. And he replied, well, but you couldn't possibly know about the Ukraine war. And then I said, yeah, sure I did know about that. I did expect that. That means I didn't know exactly that Ukraine was going to happen, but something was going to happen. That's how the cycles work. They say we should expect something will happen. So what will happen to make Norway go down here? It would have to do something with the oil price, I guess. Okay, let's have a look at this one. Here are some possible comparable cases, from the 70s and 2000 and 2007. And we see our top here was late. In the year 2000 we made an early high, 2007 was early. So our current top looks more like the 1973. And these are aligned with the cycle, and we see at this point we had the big relief rally in 2007 and in the year 2000. But when we look at the 70s, it was because the top was so late, it was kind of too early for the big relief rally, and it was more a sabotaged action and a very late big relief rally. And that could be what we are seeing now. The purple is now, and it's too early, I think, for this late big relief rally. Maybe we crash down as in the 70s, because the overall cycle is going down into this point. And then we had a late big relief rally in the 70s, while these other were just crashing down. So we have to navigate through these cycles and see what happened before, and maybe it will repeat in some way. So the natural resistance now is around the 50 MA. We could go up there or not. We could break a little bit above. We'll see. We just have to cross our fingers and hope the cycles will work once again. See you in the next one.